Hello and welcome to the Get House podcast, brought to you by gethousesurvey.ie. Buying a home in Ireland is difficult, confusing and stressful. From saving and dealing with banks to trying to understand the different mortgage options available, looking up phrases you've never heard before, and maybe even moving in with your parents. It's hard. For most of us, we're just trying to buy our family home. Somewhere we can watch our kids grow up and make memories, somewhere we can sit down in the evening with a glass of wine on our favourite show, somewhere we can invite our friends and family for dinner and end up drinking and singing through the night, or maybe it's just somewhere you can feel secure and call your own. So, if a home is for creating these memories, then why is the process to get one so difficult? Why do people need to go through years of stress before they can buy a home? It shouldn't be like that, and that's why we've created the Get House podcast. Throughout this series, we'll be talking with experts from every stage of the house buying journey. We'll get the information you need to make everything clear, help you plan and start your house buying journey, and get out the other side. There'll be tips and tricks to make your life easier. We'll debunk some myths around getting a mortgage, and we'll try to have a bit of fun along the way. This episode is called So You've Decided to Buy. Our guest is Enda O'Toole from G&E Mortgage and Financial Advisors. Back in 2017, when we decided that we wanted to get serious about buying a home for our family, Enda was the advisor we spoke to. He helped us get on that journey, navigate all the complexity and get out the other side. So I was really excited to be able to sit down with him and pick his brain about the process. I really think you'll enjoy this one, so sit back, relax, and let's get into it. Enda, thank you for joining us today.
No problem.
And Enda, you work for G&E Mortgage and Financial Advisors.
That's right.
Tell me a bit about the company, how you and your brother started it up, and how long you've been going for.
Basically, we set up in 1998. Both myself and my brother Greg, we were working in the insurance industry. I was based in Waterford, working with a company called Irish Progressive Life that subsequently became Irish Life. Greg was a sales manager with Canada Life. That actually amalgamated into Irish Life as well eventually. So we were sort of thinking where we were going to go from there, and a conversation came up one day that we both sort of decided that we wanted to get out on our own to set up a brokerage. I wanted to get back to Dublin, so it just fell into place. So it happened very quick because we started talking about it in about March 98, and by September we opened the doors. And so basically we've been here for the last 22 years now as a mortgage and financial broker.
Still standing after 22 years. Nice. The reason I actually wanted to chat to you is because you helped myself and my wife Emma when we were trying to buy a house. But even before we got in touch with you the first time, because we're both from the same area, we both go to the same GAA club. You help out with the teams, I help out with funding the bar. By drinking there. But every person I spoke to, and when we said we were thinking about starting to buy a house, they said, "Oh, you need to speak to Enda. You need to speak to Enda." I heard it about 5 times from 5 different people.
That's good.
All unrelated, and so we said we better talk to you. So that's why we've asked you on. So I'm really glad you're able to join us today. I suppose the first question is really for somebody who is either, it could be a single person, it could be a couple who are just starting out, and they're thinking about, or they've just made a decision that they want to buy a house. They don't really know what they need to do. They don't really know how to navigate everything. So what's the first advice you'd give to somebody who's just made that decision that they want to buy?
Yeah, I mean, obviously it's something that they haven't done before, and it can be a complicated process if you're not given any guidance. So it is important that they speak to somebody so that they can plan ahead, because what they don't want to do is have a situation where they're thinking about it and then sort of in their heads they say, we'll probably look at it in 6 months, we'll start looking around in 6 months. That 6 months comes around, they start looking, but they're not prepared because they may not get mortgage approval. So they have to start putting in place procedures to make sure that in 6 months or 12 months, whatever their time frame is, that they're well positioned to get an approval. So what we would do is, for a lot of clients, when they come to us, in a lot of cases, they're only at the very start. So we sit down with them, have a consultation, a free consultation, and basically map out what they need to do over the next 6 to 12 months. And at various points during that 6 or 12 months, we give them a call just to make sure that they're moving along. And in some cases, we may be able to fast track the application if things are moving well, or if they've sort of done what they've had to do, and if something comes up that they're interested in, they may not have to wait as long as they originally thought, as long as they've followed the plan. So that's really, now some people have been saving for a year or 2 years just automatically, not with any intention of buying a house, but they're just together, or a single person is saving away. So they might come to us and, they have, inadvertently done enough to put them in a situation where they could get approval fairly quickly.
Yeah.
So it's a different situation for each person. But as from your point of view, what you're looking to do for somebody who's only starting the process, that's what they need to do. Just sit down with a mortgage broker, like ourselves, and just get that plan that they need to put in place.
Okay, and I suppose the key thing there is thinking about saving for this 10% deposit if you're a first-time buyer. What's the best approach towards saving and just getting some kind of regular saving pattern? What's the best approach towards that? Should it be a separate account?
Yeah, I would recommend a separate account, so it's distinct from where your salary or wages goes into. And it also means then you're less likely to be dipping in and out of it, because what the lender doesn't want to see is that you're setting up a savings plan and then you save 1,000 one month, next month you take 500 to go on a weekend away. So what you need to do is to show your discipline to save on a regular basis, and that you're not actually dipping into it. Because ultimately what you're doing is you're saving your deposit, but you're also giving the lender comfort that you can afford a mortgage. So that if you're saving 1,000 a month on a regular basis for at least 6 months, when it comes around to applying for the mortgage, the lender can see now you can afford to pay a mortgage because you've shown it. Yeah. So that's one aspect. Obviously, your wages and salary comes into what the amount you can get, but that has to be backed up by your ability to show that you can afford a mortgage.
And you said an interesting word there around showing the banks you have to discipline. So a lot of friends of mine over the last few years, when they've been saving for their mortgage, and some of them are still on that journey, they've cut back completely on no takeaways, no nights out, no weekends away ever. Is that the right approach to take?
No. Yeah, I mean, you don't have to do that. You have to live. They're not expecting you not to have weekends away or takeaways or whatever. But you set aside, you agree on a figure amongst you, a couple, what you're going to save, and try to stick to that. Now, there will be months maybe that you have a bill like a car insurance or whatever, that you say, okay, maybe I won't be able to save as much this month. So instead of putting 1,000 away, you put 500 away. But that's still going into your savings account, and it's left there, it's ring fenced. So, you're going to have to spend, you're going to have to live. The things that you do need to be careful with on your bank account are making sure that you've no referral fees or direct debits bouncing. Okay. So that, there's always enough in your account to cover your outgoings.
Yeah.
That's important. So that, again, if you think you're struggling, just don't empty your working current account too much so that it will cause that to happen. Yeah, because the lenders...
Just like a bit of a buffer in your...
That's it, yeah. Just try and keep a little bit extra there so that you're sure that they're all going to be met, all those outgoings.
Okay. And then another thing that pops up really regularly, and if you look at any online forums, a lot of people mention it, it's around things like gambling transactions on their account. Some people say, oh, look, if it's the odd bet, it's fine. Others say if there's any bet, a bank won't touch you. So if somebody's depositing 20 a week to Paddy Power, is that something they need to...
Yeah, I'd be a little bit careful about that. I mean, you can't get into the minds of underwriters because they all vary from underwriter to underwriter. But I mean, if there's a regular pattern of that type of situation, it wouldn't go favourably, so you just need to consider that, it's not something you'd want to be doing. It's probably not advisable anyway if you're saving. So you'd want to keep those sort of short or small bets. Do it through the shops. Now, I know the shops are currently closed, but it's just advisable, not to be sort of doing those type of things while you're planning for a mortgage.
Yeah. But as far as I can tell, there's no hard rules from the banks. It's just really common.
Yeah, exactly. Like, I mean, if there's the odd one, like, I mean, there can be a situation where you're just buying a voucher for somebody and it goes through as Paddy Power or whatever bookmaker. So, I mean, there's not they're not going to just turn it down if there's a couple of situations, because everybody has a flutter. It could be at the Grand National or whatever.
Yeah.
But if it's a regular pattern, that's where, they start to sort of look at this a little bit, more intensely.
Okay. And then one of the things that we hadn't even realised that we needed to do, and then there was a little bit of, I suppose, anxiousness around it even before we seen it, was requesting a credit report. Does everybody who's starting on this journey, do they need to get their own credit report to see where they stand and see if there's anything there they didn't know about?
Well, it's certainly anybody that would have had a loan in the past and can't be 100% sure over the last 5 or 6 years that did they miss a payment, because lenders will look back on your past credit. A lot of people wouldn't have a credit history per se because they've never taken a loan out. They've never had a credit card. They've never taken any finance. And that would be in a lot of cases of young couples who are planning ahead. They're really only starting out on the financial journey. So their first one is saved in a joint account. So it's not really necessary for them to do a credit report. It's no harm. It only costs €6 and you'll be able to give that to your financial advisor as to what your credit rating is. Yeah. But certainly if somebody had a loan and there was any doubt that there might have been a mispayment or any issue with a credit card, that there was late payments, or if it was revoked or things like that, because over the years people will forget, especially the young people. They think, I sorted that out, so it's grand, don't worry about it. But these are on the credit bureau for a number of years.
Still there following.
Yeah, and it's important that if there is any past situation, that you inform the lender when you're applying, and deal with it and explain what happened. Because if you forget about it or don't tell your financial advisor about something in the past, and it only comes up at an application stage with the lender, that again would ring alarm bells.
Right. Okay.
Where you're trying to hide something. So it's better to be upfront, and as long as it's not too bad, there can be ways around it.
Okay. So, say somebody is currently renting and they're paying, I don't know, for argument's sake, €1,000 a month. It would be a good deal if they had 1,000 a month at this stage. But say they're paying €1,000 a month and they're also saving another 500 a month. How would the banks look at that situation? Because they are putting 1,000 into their current rent.
Yeah, absolutely. I mean, the way the lender looks at your affordability is a combination of the rent that you're currently paying, savings, and a loan that you might be paying now that may be finished at the time of the application. So they look at those outgoings and say, these are all monthly outgoings that you currently have that you won't have when you start the mortgage. So if you're paying those three, rent, savings and a loan, or even without a loan, they look at the combined amount and say, that's your affordability.
Right.
So that determines, alongside your income, what you're capable of borrowing. Just in terms of the rent, it's important that there's a trail of the rent being paid. So I would advise anybody that they would transfer it out of their bank account to whoever the landlord is, and specifically say rent on the transaction in the bank, so that the lender can see easily each month a certain amount going out for rent. The complication can be, which has happened in the past, people are handing over cash and there's no way of proving that is being paid every month. People say, what about a rent book? Anybody could make up a rent book. So it just makes it harder for your financial advisor to try and get you over the line on the affordability if there's no trail. So certainly set it up as a direct debit from your bank or a credit transfer.
Making it as easy as possible for the bank to see your financial, your entire financial situation. That's your affordability.
The easier, basically, if you put yourself in the place of an underwriter, he's getting a file that he has to assess and whether to approve it or not approve it. Now, if the file is messy, it's all over the place, or if it's not clear-cut what's going on, he has to go looking for it. It just makes it harder for him to approve it. So what you want to do is make it as easy as possible for the underwriter to say, yeah, this is all ticking all the boxes that you need, makes it easy for him, and you don't have to be going backwards and forward, because it gets frustrating for everyone, if for the lenders and for the clients, that they have to keep going back getting more documents because they haven't supplied them at the start. And that again is the role of ourselves or any financial advisor, to make sure that when the application is packaged, that everything is more or less there for the underwriter to be able to make his decision. Now, there will be the odd thing that they need to come back on, but in general, you try and cover all angles.
Okay, and we've mentioned a few times around different other loans that you may have. Is it okay for people to have car loans or other loans while they're applying for a mortgage?
The only issue is that it can affect what they can borrow, depending on what the outgoings are on that loan, and depends on obviously salaries, because ultimately the lender will have a figure of net disposable income that they will determine based on the overall application, that they can assess how much you can borrow. So the more outgoings that you have that are ongoing, so that will be still there after you get the mortgage, they factor that in. So now that reduces down your net disposable income that you have each month, because it's still there.
Yeah.
So that's the only issue about having a loan. It's not per se that you have a loan, it's whether it affects the amount that you can borrow.
Yeah, it's back to the affordability picture again. Okay.
Yeah.
Okay, so you mentioned that you guys would sit down with somebody at the start of this journey and explain this process to them, and really what they're looking at over the next 6 to 12 months. So say we're about, I don't know, halfway through that process. We're close to having our deposit saved up. We've another few thousand to go, but we're on the path there, and we've a few houses that are popping up in the area that we like the look of, and we want to start thinking about it. What do we do at that stage where we're close to getting the deposit, we're close to having the extra funds for solicitor fees and so on, and the houses are starting to get our interest?
Yeah, I mean, the thing is that the 6 months is sort of gives the lender the comfort that they need to say that this is not just over a month or two, because it's easy enough for people to put these things in place for a month or two and then they fall back into their old ways. So they need to see it. So that will be quite important. But if you're getting near to it, the application process does take a while. So it's no harm to start preparing for it in the lead up to that 6 months by starting to get some of the documentation together, forms that your employer needs to fill in. The bank statements need to be 6 months, in the majority of cases. So you sort of want to have that 6 months just as you're applying. But it is important to sort of, put yourself ready, because if you're looking at houses, you need to have an approval realistically before an estate agent will consider any bids, or if you get to the stage where it's nearly coming to sale agreed, you're down to the last 2 or 3 bidders, they will want to see a mortgage approval. Mm-hmm. So if you don't have that, you're going to be knocked out of that situation. So you need to sort of be prepared, planning. So there's no harm, as you say, as you're coming up to that process or the 6 months, to start putting the application together to have it ready to go.
Okay. And then another question that a few people have said to me is around getting gifts from relatives. So some people are, I suppose it's a pretty lucky situation if they are, but they have an auntie or uncle who's had a few thousand in savings, or one of their parents, and they're willing to give them that money to help them get over the line with the deposit. How do the banks look at getting a gift from a relative like that? Yeah, no,
they have no issues. Lenders will vary. Some will not want to see it all being a gift. They would like to see some of it saved. And again, it's the affordability. If people haven't been saving and they're relying on a gift, they will still need to show their affordability. So that could have been rent, or whatever. But the lender won't consider an application if somebody's coming straight in, no affordability. It's a gift is the deposit. As far as they're concerned, they haven't shown any indication there that they can afford this mortgage or actually pay it. So there's no issue with a gift. There will be forms that need to be signed by the person who's given the gift to say that the gift is it's not repayable, and that they'll have no interest in the property. But other than that, a gift is allowed. So, and that can help people, because if they think they're just getting short and there's a gift there, to make up that balance, it just means they can maybe apply a little bit quicker.
Yeah.
So they have to.
If they've got the history of affordability or the 6 months affordability behind
exactly, and they're just that bit short. The other thing then as well is if they are looking at a new property, then they Help to Buy scheme. So that can be part of their deposit. The Help to Buy scheme is basically for new builds. It's a scheme that the government introduced a number of years ago, that you can get up to 5% to a maximum of 20,000 of the purchase price on a new build, and it's based on your previous 4 years tax. So it's like a rebate of the tax that you paid over the previous 4 years. So if somebody is looking at eyeing up a new house, which some first-time buyers are, then they need to apply to the revenue for approval for the Help to Buy scheme, so they know how much they qualify under that Help to Buy scheme.
Yeah.
So, for example, if somebody is buying a house for 300,000 and they qualify for 15,000 through the revenue Help to Buy scheme, so that's 5% of the purchase price. They then only have to come up with a balance of 15, assuming they qualify for the 270 on the mortgage. They only then need to have saved 15,000.
Okay.
Plus their other expenses, being stamp duty, solicitors' fees, and a few other bits and pieces. So in those situations, then their deposit it can be lower.
Okay. So yeah, and it's over the last 4 years tax.
Tax that you basically paid. So you're effectively you're getting that back in the form of a deposit.
And that's you said that's the local, each person's local council that will.
No, that's with the revenue.
Oh, that's with the revenue. Okay.
Yeah. So basically, you just apply to your local revenue tax office or wherever it is. They will then obviously assess it on the basis of what your last 4 years, and then they give you a certificate or to say what you qualify. So whether it's a single person or a joint application. So then you know that if there's a new build, that if you've qualified for the 15, or some people will qualify for the maximum of 20,000. So if they find a new build of 400,000, they will qualify for 20,000 of that back, because it's 5% of 400 will be 20. So now if they see a new build for 300, even though they qualify for 20, they'll only get 15 because it's the 5%. It's the
half your deposit essentially for
exactly.
It's in our case we bought a second-hand home, but I wouldn't have minded some of that tax back over.
No, exactly. Now the thing about the Help to Buy scheme is that you'll find that new builds are that bit more, the higher inflated price-wise because of that in some ways. So the house that you got, if a similar new build somewhere else, you would have found it would have been a lot higher of a price.
Extra premium on top of
so it sort of nearly balances itself out. But it is actually very helpful for first-time buyers where they haven't saved the deposit, because now they don't have to put it together.
Yeah.
Now obviously the other aspect of this is you need to be sure that the mortgage you qualify for is sufficient for you for the 90%. So you're saving the 10%, or you're getting some of it back in Help to Buy. But ultimately, you need to qualify for the 90% if you don't have any more saved than the 10%.
Yeah. And when we say qualify for the 90%, that's the 3.5 times our combined earnings.
Exactly. But also factoring in your net disposable income, other things, situations where if you have a dependent child or children, if you have outgoings, loans, and other things, maintenance, So these are all the things that need to be looked at. And, going back to the very start when we spoke about an initial meeting, it's probably no harm to get an indication from your financial advisor as to realistically what is the level you're looking at. Because there's no point setting your sights on a house 6 months or 12 months down that is way outside your borrowing capacity.
Yeah.
So you'll get an idea when you have an initial meeting based on your income at that stage, what likely you're going to get within reason.
Yeah.
Now, that could change if over the coming 6 months or a year your income goes up or you get a promotion, but it will give you a ballpark figure. And that would generally be based on 3.5 times. Mm-hmm. Now, there is scope for lenders to go outside that 3.5 times. That's the central bank guideline.
Yeah.
where they can do what's known as an exception. So they can go a higher multiple than 3.5 times. It's on a case-by-case basis. They will look at the case as a whole to see all aspects of it, your affordability, your account conduct, your income, your security of employment, and you may then qualify for an exception. And that could get you more. But it's difficult in planning to sort of say to somebody, this is what you will get, because you'll only get approved for an exception when you apply.
Right.
You can't.
There's no way to know that beforehand.
You'd have an idea, but you can't really hang your hat on it. You just have to sort of know that while you might get it, that's not a guarantee. And for example, at the moment, there are no exceptions because of the current situation. So somebody who might have, been looking in January, February, and was sort of thinking, if I'll get to August with an exception, I'll be grand. They won't get it now because there's no exceptions. So you just have to factor that in as well.
Okay, and so we've covered it. We've covered a good bit there around the actual the actual journey of getting to the application itself. Yeah. So let's fast forward to the end, to crunch time. We've been saving for 6 to 12 months. We have a good pattern of savings in our accounts. We have the deposit saved up, and there's a house that we want to apply for, and we want to apply for there's a house we want to buy, and we want to apply for the mortgage and see if we can get through. What do we need to do when it comes to that crunch time? Okay, so once you're ready, and you've done all the aspects that you need to do, basically then you just meet up with your financial advisor to get the application ready to be processed, and that can take a few weeks, so you need to allow for that. So basically what you're looking to do is get this approval in principle, to know that if you then start looking at houses and see a house, that you can be serious about putting the bid in. Because if you don't have that piece of paper, if you don't have that approval, then you're at nothing basically, because an estate agent won't take you seriously. Okay. And they won't wait for you, because they're going to have other buyers. So once the application goes in, we then sort of we would work with the lender to sort of deal with any queries that might arise. And after generally 10 to 12 working days, we would expect to have, assuming everything was okay. Now, it can be quicker, it depends on how busy they are at a particular time. But we can basically then hopefully have an approval for you. Now, if there's any conditions attaching, that will be included. For example, they might approve you for an amount subject to you clearing the loan that you had. Okay. Now, that might have been your intention anyway, so it's just in the approval as a condition. So prior to you then drawing down the mortgage, you would have to clear the loan and give them proof that you've cleared the loan. And that could be, so if we had a loan that was costing us $200 a month, the bank would ask you to do that, so that $200 a month which you're paying on the loan, they know it's freed up to help you cover your mortgage. Yeah, exactly. Now, how you clear that loan, it can be from, obviously it could be your savings, it could be a gift from family. And I mean, unless it's a large loan, I mean, if you had a loan of 4,000 or 5,000 and you were paying $250 a month, if you didn't clear the loan, it could reduce your borrowing capacity by upwards of 30,000. Yeah. So by clearing 3,000 or 4,000, you're giving yourself the scope to borrow more. So that's why you would possibly need to clear that loan. Okay. How should people consider which banks to apply for, or how to handle the different the different interest rates for banks? How should people approach kind of dealing with that and deciding what's the best one? Okay, well that's really where again your financial advisor would sit down with you at the time you put the application together. So you don't need to make that decision until literally you're applying. It doesn't matter who you would have had your savings account with. It doesn't matter who you bank with. When you apply, it's open season for you as far as you're concerned. You're going to look and see what's the best lender that I can go with in terms of the rates that they're offering. Currently, some lenders are offering 2% cashback, which would go towards maybe covering your stamp duty and your solicitor's fees. That might suit some people. It may mean that the rate that you're getting could be slightly higher. But in terms of the overall situation, it suits them because
they might have been just short of that few thousand to cover those expenses. So this suits them to get that 2%, whilst they know they might be paying slightly higher on a rate. Other lenders then would have reduced rates or cashbacks if you open current accounts with them. So with some of them, they would give you a 0.2% discount on the rate that you're going to get. So that further reduces your repayments. Others would give you a 2% monthly cashback on your mortgage repayment if you have a current account with them. And then you're looking at headline rates. If you want to fix for a long period, then you look and identify who is the most competitive if it's fixed for a long period. So it's basically at the time you're applying to see who is the best, that fits what you're looking for.
Best bank for somebody might not be the best bank for everybody.
Absolutely,
everybody has
one size doesn't fit all. I mean, at the end of the day, everybody will have different needs or requirements. The other situation might be that at any particular time, a bank or maybe one or two banks might be doing exceptions where the others aren't, because they may have used them all up or whatever. So now you're in a situation that somebody needs an exception. So now you're limiting yourself to the banks that are still in that section of offering exceptions. So that's another issue. So it's really a matter of sitting down at the time that you're applying with your financial advisor and saying what exactly you're looking for. And your financial advisor will know your circumstances, so they'll be able to sort of direct you as to where you go, because ultimately it doesn't matter to them where it goes. It's really getting the best deal for the client that suits them.
We're sale agreed on the house, we're mortgage approved, everything's looking really good. What are the last few things we need to think about with regard insurance?
So basically your sale agreed, you need to engage a solicitor obviously for the conveyancing. You will need to then look at your mortgage protection cover, and it's important that you start that process straight away, because you want to ensure that you can get mortgage protection that you're acceptable to an insurance company, because has happened in cases before that for whatever reason there could be an ongoing investigation or a medical history that somebody might not be able to get cover. Now that can affect that could affect you getting the loan, because the lender will have to make a decision: are they prepared to proceed with the loan if life cover is not available on one of the parties? So before you sign the contracts for buying the house, so when you put the deposit down, that's literally, if you sale agreed, you put in a booking deposit down. So you haven't committed to the house at that stage, and that's a refundable. For whatever reason, if you had to pull out, you'll get that deposit back. But when you move along and your solicitor does all the work then to get to the point where you're signing the contracts, and that's the point where you're agreeing to buy the house, you sign, so you're now committed. So there can be complications then if the loan can't go through for whatever reason at that point. So that's why it's important to know that you can get your life insurance, your mortgage protection, life insurance, mortgage protection. It's the same thing. So I would advise at that point that you would start to put an application in to get you accepted.
Okay, and then I think we're coming up to the last few minutes. So something that I want to ask all our guests is, right now there's a lot of people in Ireland who are feeling very stressed about the whole idea of buying a house. It feels like this huge daunting task, and it feels like something that's unachievable to a lot of people. What's the one piece of advice you could give to somebody who's just starting out, they're just thinking about buying it, but they're feeling the stresses of even starting? What's the one piece of advice you could give to somebody?
Well, I think they need to sit down and talk to somebody who has the experience of the whole process, because it's obviously something that they haven't done before, and to an uneducated eye, it's a daunting prospect, because this is a huge commitment. But when you sit down and look at the process and look at what you need to do and look at how it works and how you get to that end point, you can, our job, that's why I have no hair, is to take the stress out of it for the clients, right? That our job is to take that stress on, and particularly dealing with the lenders. That's the stressful part. So if we sit down with them at the start, we hold their hand from the start right to the finish and advise them along the way. They're going to have questions that they might think are silly. They're not, because they've never done it before. So they can ring us at any time, or whoever they decide to deal with. And that's our job, just to take the hardship out of the process and make it as easy. And it should be enjoyable, because like, this is a huge thing to go and buy a house. It should be exciting.
Yeah.
Looking for the house is an exciting time. And then when you get that keys, I mean, you know yourself, when you get the keys, it's great.
Yeah.
So it shouldn't be stressful. It should be as enjoyable as possible.
Yeah, no, I'd vouch to that. The going through the house buying journey for ourselves was a pretty stressful process. But I always remember when we got the keys and we got through the door, and we didn't even move in for just over a month, because we needed to make it livable, basically. But once we got the keys and we were inside the door, I just remember all this stress just lifting from my shoulders.
Yeah, I know, it is, yeah. And it actually can get stressful right near the end sometimes, because for one reason or another, typically nearly all the time with some of these some lenders, there's a little piece missing, or there's a name is wrong somewhere, and now you have to go back and redo it, and that's where it gets stressful. It's understandable, the lender has to get it right.
Yeah.
But it just, from the client's point of view, it just seems petty, and it's delaying the whole thing, and you might have arranged for people to come in and move furniture in and whatever. So those can be stressful times, but we try to avoid that in as much as we can by getting everything right just for it to close on time.
Okay, and thank you very much. And I'll just finish by asking, if somebody is about to start this journey and they want to reach out and talk to somebody, how do they contact you guys here?
Well, we've a website, G&D Mortgage and Financial Advisors. We can be contacted on 462-01-462-7222, and we'd be happy just to have a chat. Don't have to make any commitments to deal with us. All we're literally doing is having a quick chat, explain to them what they need to do. Hopefully they'll come back to us. If they don't and they go somewhere else, well, at least we'll have helped them along the way. But we'd be hopeful that, having spoken to them, that when their 6 months is up, or whenever they've finished the preparation, that they'll come back and we look after the application for them.
If you're willing to take all that stress from them, or at least part of it, I'm sure they will.
That's great.
And thank you very much.
No problem, no. Thank you. Cheers.
And that's the end of episode 1 of the Get a House podcast. I think the most important lesson we can take from this is, when you're picturing this house buying journey that lies ahead of you, it can feel like this huge, stressful, daunting task, but it doesn't need to be that way, or at least you don't need to take all that stress yourself. For us, we reached out to Enda because we received so many recommendations, and it was a no-brainer. As I mentioned earlier, he helped us navigate the entire process, and he did take a lot of the stress off us. It was a stressful process because you're trying to buy a home for your family, but it would have been far more stressful if he wasn't there to guide the way. If you'd like to reach out to Enda, I'll include his contact details in the show notes. Or find a financial advisor in your area. Talk to your friends and family and find out who they dealt with, get recommendations and contact them. But do just talk to somebody. Don't try to take the entire stress on yourself. Talk to somebody else, let them guide the way, let them help you through the process, and it will dramatically increase your chances of getting out the other side. And that's the end of this episode. I hope you enjoyed it and you were able to learn a few things. If you did, it would be great if you could leave us a review. It would be even better if you told a friend or family member who are on the house buying journey or thinking about it, so that they can have a listen. If you have any feedback or questions you'd like us to address in a future episode, you can email podcast@gethousesurvey.ie and we'll try to get that done for you. Otherwise, thank you for listening and have a great day.